There are 4 criteria you must look out for before you buy a penny stock gap up, and these 4 things are: we're coming off an extremely hot market with penny stock runners such as APDN, NSYS, PSTV, and Kern. In a market condition when we have a new gap up almost every single day, it's even more important that you do your own due diligence before jumping into buying a stock. And if doing research is too much work, then maybe following chat room alerts easier. I hear people are turning $500 into Lambos every single month, while I'm here working my ass off doing my pre-market research every single day. So clearly I'm doing something wrong. But if you want to learn about the 4 key criteria to look out for before you buy a potential runner yourself, then this video is made for you. As long as you smash the like button for the YouTube algorithm, I really appreciate you, my friends. So the first criteria I look out for before determining whether a pre-market gap up is a buy is unusual trading volume. Simply put, if a pre-market gap up volume is really thin, it's not likely to hold. That's what we call a stock is up on air, and it's likely to sell off right at the open, just like CLSN and VLRX. And how do you determine whether a volume is actually above average for a particular stock? Well, that brings us to the second criteria to look out for before buying a stock, and that is the daily chart. Let's take a look at one of the hot stocks from last week, NSYS. On Wednesday, November 15, this stock gapped up huge. So let's look at the daily charts first. You can see this stock usually trades with extremely thin volume. This is what we call a barcode chart, where there isn't any range or volume. Basically, no one is buying or selling the stock. So on any other day, this stock, NSYS, isn't even worth looking at. But as you can see, on Wednesday, during the pre-market trading session, this stock was already trading around 300 to 400,000 volume, which is really unusual for a stock that generally only trades 300,000 for the entire day. And we need the volume to push the stock. This is the kind of simple volume analysis that everyone should be looking at when building watchlist pre-market. Now, besides the unusual trading volume, the daily chart will also give us important information regarding the key support and resistance on a stock. So if we look at NSYS, it's gapping up above the $5 level pre-market. So if we're speaking in purely technical analysis terms, previous resistance once broken becomes support. I'm not saying that's a true statement 100% of the time, but that's what the majority of the people are taught and follow, and sometimes that becomes a self-fulfilling prophecy. And after the $5 support on the daily, we can see the next clear resistance is 550s. After that, there's more upside to 625 to 650, and then the 7 to 750 mark. So this is the kind of daily chart that traders and investors like to see, that the stock can give them a lot more range to the upside. If you want to learn more about how to draw support and resistance levels, check out this other video. So besides the key support and resistance, the daily charts can also tell us historical behavior of a stock. So let's take a look at a few of the runner charts from last week. First, TRNX. What do you see on this daily chart? Well, the stock has been downtrending pretty much since 2014. And when you see a beaten down daily chart like this, there's a few important things that you should know right away. First and most importantly, this stock is probably a piece of shit. No joke, it's true. Look at all these penny stock daily charts. Downtrending charts like these are usually results of multiple reverse splits, insider selling, and even more dilution. Generally speaking, of course. Now, another very important thing you need to realize when you see a long-term downtrending chart, just like TRNX, is that there are probably many bag holders. And no, I'm not talking about the multiple boyfriends or husbands holding my purse while I shop at Louis Vuitton. The bag holders I'm actually talking about are the traders and investors holding this piece of stock long from $5, $10, and even $20. So let's put our trader psychology hat on again. If you were stuck holding a position long in this penny stock TRNX, what would you do every time the stock gaps up significantly? Well, I'd probably take this opportunity that I've been waiting for weeks, months, and even years to sell my position and get out, right? I already lost my
Lamborghini money
on this stupid penny stock that I never should have bought. I just want to get the f out before I lose my Civic too. So besides looking for bag holders on the daily chart, another key factor I look out for is whether the stock has a history of holding its gains after a run intraday. You can see this on the TRNX daily chart. Every time it spikes up, it's followed by a sell-off. That's why they have these huge candles spiking up but still close red on the day. And it's a similar thing with PSTV and APDN. That means these penny stocks can squeeze, yes, but they tend to sell off near the end of the day or on day 2. So that probably means you should not hold the stock long overnight or swing it, hoping it will go to the moon in the next few days. Now, I'm definitely not saying every single stock with that kind of daily chart will sell off right at the open. So please, don't just go short selling every single stock that looks like that. And that's because we always need to look at the third criteria, which is the float of the stock, the amount of shares outstanding available to be publicly traded. The float of a stock is a key factor to determining whether a penny stock is likely to run. And honestly, checking the 3 criteria mentioned so far takes less than 5 minutes, so there's no excuse not to do this. And you know what else takes less than 5 minutes? Tapping the like button if you haven't done that already. Actually, that takes less than 1 second. Videos like these take me 10 to 12 hours to make, so if you don't mind taking that 1 extra second to tap the like button, I'd really appreciate it. So the float of a stock is a key criteria to look at when determining a potential runner. If you look at some of the famous or infamous, depending on whether you are long or short, hot stocks such as BPTH, SCS, and most recently APDN, they all have one common factor, is that they are all low float penny stocks, meaning their floats are all under 5 million shares, and some even as low as 800,000. So when a stock's float is under 5 million, with enough above average trading volume, which we talked about as the first criteria, that means all the existing public shares for trading are being swapped between buyers and sellers in an extremely short amount of time. As a result, the price of the stock can be quickly bid up when there's an overwhelming demand to buy and not enough people to sell. If the stock has unusual trading volume, a lot of upside on the daily chart, and then you sprinkle that low float factor on the top, this could be explosive for a penny stock gapper. And we've seen stocks like these running 200%, 300% in a single day. Now, let's not get too excited about all these potential runners, because many beginner traders buy into the marketing of turning $500 into $1 million in 6 months. They start using their max buying power and put everything into a $5 stock, hoping that it will make it rain Lamborghinis. I hate to be a party pooper, but I must tell you the truth that no one wants to hear. As exciting as all these day trading marketing and chat room alerts tell you, these penny stocks can often break your account. And that's because most of these low float penny stocks are actually pumped up to do an offering, which is the 4th criteria that we must talk about. Look for penny stock potential dilution. I get it, reading SEC filings, it sounds really hard and sounds boring, but this could potentially save your trading account. What I look out for in all these penny stock gappers is whether the company has any outstanding common shares registered to be offered in order to raise more capital. If there's any outstanding warrants, convertibles, and whether they can sell any of the securities at the market. And that's exactly why it's so hard sometimes to buy stocks like PSTV and APDN. If you've seen the intraday offerings this year on CAPR and PSTV, you'd understand what I'm talking about. I'm perfectly fine letting APDN go when it was running from $7 to $20 because I do not want the risk of a rug pull intraday on an offering announcement. And instead of trying to join the hype and buy the stock like everyone else, I'd rather be looking for toppings to short this pig. Every time something like this happens, it hurts and it makes me really sad inside because there are some trader friends I never hear back from the next day. And I'll see a lot of my subscribers asking me for help, either in the comments or in DM, because they were stuck holding the position long when the stock announced offering either intraday, pre-market, or after hours. The truth is, penny stocks like CEI, SLS, TOPS, and YRIV, and many others are actually just vehicles for the insiders to sell and continue printing money out of thin air, meaning the stock is publicly listed in order for them to keep on pumping up with news, then register to do an offering to raise more capital in order to grow and expand the company. As a result of all these dilution, the stock continues downtrending beneath $1. Then the company gets a delisting notice from the Nasdaq exchange. Then they file to do a reverse split. After the split, they pump it up again with even more press releases. And the toxic cycle continues over and over again. And you can find out about all these information in a stock's SEC filings in the Form 10Q, S1, and S3. I've already made 3 videos on how to read these complicated looking SEC filings, so please go watch that. I go about them in detail step by step in the videos. And they're free. You didn't have to pay a $5,000 DVD for that. And let's be very clear, I am not at all a trading guru. I'm just a trader sharing ideas and opinions here. To be a guru, you need to be an expert of it all and turn $500 into $1 million in 6 months. And you need to own multiple Lamborghinis. Guys, I don't even own a bike. It got stolen. I don't know why anyone would want to steal my bike. As a matter of fact, I'm wrong all the time. You can see these losses in my trading recap videos. But the key is I make more than I lose, I plan out all my trades, and I do my own research, and I manage my risk. If you guys want me to do a video on how I create my watch list pre-market every single day and plan out all my trades, then comment watch list down below. If there's enough requests on this video, then I'll do it for you guys. Then you can learn to plan the trades yourself. And like I mentioned in this video, you do not have to play penny stocks. You can still grow your small account trading mid-cap and large-cap stocks. The good news is you get to keep your emotional sanity, or some of it anyways. I've been sharing my trades and commentaries on both the large caps and penny stocks in my weekend trading recap videos. And I also post my charts during the week on my Instagram. So if you're interested, make sure to check that out too. And the perks of being part of the Humbled Trader family doesn't end here. I'm also sending out free weekend watch lists every single Sunday. You can sign up for that using the link below. And the only thing it's costing you is a simple tap on the like button. And don't forget to comment watch list down below if you want to see a pre-market planning video. Thank you guys so much for watching as always. I'm the Humbled Trader, and I'll see you guys next week.